10-year yields go out at the end of the week, trading at around 396, unchanged on the session, up about 6 basis points on the week. Now, today's highlight was the PCE data along with the Chicago Purchasing Managers Index. Nothing really altered expectations for what the Fed may or may not do next month at FOMC. It left the door open for a 50 basis point cut, although the market's still pricing in only about 30% onto that happening. 10-year note yield saw a very, very narrow range ahead of the holiday weekend, only about 3.5 basis points ahead of the Labor Day weekend. Obviously, we have Monday off, and the market right now kind of waiting and watching, not necessarily for what happened today, but next week we have some key data points. Market will be all focused on that. But again, seeing yields go out at 386 today, up 6 basis points on the week, very near unchanged on the session. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll see that volatility was relatively unchanged on Friday, and that's typical ahead of a long weekend. Now, on the week, we saw volatility nudging higher as yields were nudging higher. Obviously, the market getting ready for some catalyst events. What could it be? Well, let's look ahead to what we have next week. Next week, we do have some data points. We get the global PMIs. We have some other talking point numbers that will come out, but really the focus on the week is going to be the non-farm payroll number, especially after what we saw last month and the big miss, which prompted a lot of these 50 basis point rate cut talks that we were hearing from different economists and Fed officials. So clearly right now, jobs will be the key focus next week, and non-farm payrolls comes out on Friday. So after a busy week, seeing different PMI numbers, seeing global purchasing managers, and seeing the PCE data, the market really remains unchanged as far as expectation goes for where it sees the Fed cutting rates next month. Right now, we're still seeing about 30% odds of a 50 basis point rate cut. We see 10-year note yields closing out the week at 386 ahead of next week's all-important non-farm payroll number.